you have two sides of a leg in a move, right? Like you've got strength versus greed. The backside of the leg, I don't know why these triangles do this, but the backside of the leg is always going to be the stronger part of the leg. The front side of the leg is always going to be the greedier part of the leg. Okay. So when you have strength versus greed, when you have these backsides of the leg, you have larger reactions because they're stronger pieces of the move that's holding. For example, like this would represent this moment in time is right here, right? You've got a larger piece of the move than if this was getting hit right here. You have a smaller piece of time in space, right? So you actually have a smaller piece of time. So vertically, you have a larger range up and down, right? Like vertically, your range that you're protecting is much larger. You know, the spread of price would be all the way from 6,000 to 3,000, right? So you have vertically a large spread of price that you're protecting. Horizontally, you have a large amount of time that you have developed, as opposed to this level here, which is greed, right? This level here is going to be a smaller price that it's holding versus a shorter period of time. So this is kind of how it always works with backsides versus the front sides of legs, right? Because of the nature of how they are created. So let's do this. So I think I can move these. Yes, I can. So when you have these backside of the legs, you can expect larger bounces from them because they are representing a bigger part of the charts. So like if you were to simply just do the very basic TA here that we do, and you marked the weekly, and then let's go and mark the daily, which would be right here. Come on, right to the yes, right there. Perfect. You mark the weekly and the daily, and you have reactions appropriate to those. Like you hit the weekly here, you're going to have a decent sized bounce. Like you've got a 20% bounce here, 18, or I guess it would be magnet tool always messes us up. Almost 21% here, right? Like 20, we'll just call it 20. You have 20% off the backside of a leg. You hit the next level, you have the very much the same thing. You have an even larger reaction. When you start going after the front sides of these legs, they are moves of strength, of greed, not strength. And the reason why I call them strength versus greed, because these will have strong bounces that makes them very strong levels. They are very strong reactions. They are very parts of the chart that are holding up the strength of the entirety of the chart. Like it's basically holding up the entire bottom of the chart, right? When you hit a level like this, you need to break it over time. So right now, if we were to take these off, the difference here is this is greedy. This is going to be the greediest price in the move. And even greedier would be, a price down here would be even greedier than this piece here. So you see, you need to hold them over longer periods of time. Like they're not moments where you have an instant bounce. And here, so fine, you're going to have a bounce on day one, but you're not going to bounce off this and rip up to some kind of crazy levels up here. It's just not realistic. What you are going to do is you are going to use them to hold through time to go and try to break their moves. And it's going to be greediest point. And that's why I call these greedy levels and I call these strong levels, because these are going to have strong bounces because of what they represent on the charts, as to where these are going to have greedy responses. People are going to go after them. And if they hold for long enough, it's going to be the best price before you actually have the break of a move. Just like it would have been right here, right? Like you have the greediest parts of moves, right? So you're going to start to break some of these trend cycles like this. Like you have this one here to here. You're going to break this trend cycle, and it's going to create the same thing, the origin. But you notice how there's not a crazy bounce, right? Like you're going to create whatever origin is in here, whatever origin you made. I believe it's right around that price there, and it's going to cycle through the move. But it's off of a greedy point, right? Like it's off of the front side of the leg. It's not off the back side, which was here. If it was off the back side of the leg, yeah, okay, you're going to have a larger bounce. If it's off the front side of the leg, which is even in this case, I believe it was just actually it hit trend. It didn't even hit the backside of the leg. It hit trend. Yeah, because trend is created right here to here, right? So it actually hits trend here. You're going to have a greedy part of this move, and it's going to hold through trends. We can put this to here, and we can even put this to here, which was the current part of the move. Come on. Yeah, like any hold level is going to give you a reaction. Like look at today, right? But again, also look at how much we lost to get to this point. Like we're up, 7% right now. But like look at how much we lost over the course of the past few weeks. We've lost 40% of price. over
Right.
not even the past few. We're actually only talking about 1 week of action. We've lost 40% of price. So yeah, are we going to have a 10% bounce? Sure. But if this was catching the backside of leg, it probably would have been like a 30-40% bounce. It would have been something like this. It would have been something where you catch a backside of the leg and you just go straight up, right? Like this, it would have been exactly that. And I believe that actually caught this level right here, which is the backside of a leg, an untested backside of the leg. So it catches this level, and then it has a 40% reaction up. This is the difference, because it's in time and space, it's holding larger pieces of the move. So these backsides of the legs are points of strength, which will hold up the larger hemisphere of the move that's vertically and horizontally representing a larger part of your charts, right? The front sides are giving you points where it's a payoff. It's going to be the best price if it holds. So that's why I call them greedy, because you're going after the greediest price. Because if it holds, the greediest price is going to hold, and it's going to hold like this until it gets to that point, and then it will, that's where you would buy, just like right here, and then it takes a large traverse up, right? The difference between strength and greed: strength will give you instant money, greed will give you the most amount of money, but only if it's played right. You see what I mean? Strength can give you a lot of money all the time because there's strong reactions off big levels, backsides of the legs, untested levels, this and that, all this information that we've looked at, even in here, even as we looked in here and saw these bounces here, it was the same thing: strength versus greed. If the greedy level, which is the best price, is hit, it has to hold. That's the difference. And so that's what we see in all coin, in everything. Like we see that in all stocks. We see hold levels get hit over time, right? You see hold levels get hit and they create an accumulation cycle, and then they move up when they break trend. Like this is what we always see, right? Like just go to one random coin that I did recently, and it was like, yeah, well, look at the accumulation cycle on this thing. Of course, this thing moved up to 800 sats when we were here. It hit its hold level. It's the same thing across all stocks. It doesn't matter what stock you're in, right? You hit your hold level, which is the greedy level right here. You didn't hold the backside of the leg, which was here. So this is the backside of the leg right here. I mean, suppose it's an origin level right here. That's fine. This is still the backside. This is all the backside. It's just on a different time. And it hits the backside and has an instant 3-day bounce, right? So, strength versus hitting a hold level and then trying to break trends and having a larger reaction. You see what I mean? Let's measure this, strength, and a few days later, and 30, 40%, whatever it is here, you hit a greedy level, which is going to be the best price, which is the front side of a leg right here, and you hit the best price and you hold it, and it starts to break all of its trends and levels, and so then it has its move, and from the hold to here, you have 200%, because it's going to be a bigger move, but it's harder to develop the move because it has to trend, it has to accumulation cycle, it has to break trends, it has to continuously hold its move. So it has to find a base and create all these things, right? Like it had to have done this. It had to create this to this right here, which actually breaks down to here. And then this one to from here to here had to hold. So it has to create all these other data points associated with it, right? Like it had to create this right here like this and hold this part of the move, right? So it had to create this, hold that, break the local origins, break all of its cycles. And then once it's done all that, it's just clear to fly out of its mind. And then, it's just 2 straight days of upwards movement and 170% later. And, but that's the difference between a greedy level, which is the front side of a leg. It takes time to manifest. So you're faced with the decision to either buy the best price and hold it if it is going to continue to hold, or you could just, maybe cut some time out and buy the hold level. So there's I'm going to make this a different color because we can't even see what's going on anymore. This green and kind of a little thicker maybe. So you have a hold level there, and it hits its hold level once, twice, almost 3 times, and holds the level, and holds its price, and distribution to distribution candle right here, and then you would have another one right here, this right there. You have trend against the hold level, but you have to say, okay, I'm willing to buy this low price, and I have to sit in this thing and wait, because it could just simply hit an inverse and fail down, right? Like it could have simply just got to this moment right here. Could have just got to this moment and pulled straight back. And it did. The only difference is that then fine, it probably held this right here. And it did. So it hit its inverse, pulled back to its leg, and still cycled up. That's the difference though, because these backside holds are knife catches, right? Like this is a knife catch. This is hold the move because it's greed. It's the greediest price, but it's going to take a substantial amount of more time and break all its levels to move up, right? So big difference. So when you look at BQX and you see this, and it's like, oh, we just hit a trend. We just hit a hold level and it held really well. And oh crap, we're coming to all of these trends that are creating a cycle. And oh, we hit the inverse level, but then we all actually held the move to Pandora's box to go up and break the leg of the move right here. So it's like kind of like you can see what's happening in the move, right? So strength versus greed is understanding that the backside of hold levels, the backsides of legs versus the front sides of legs, they have a different meaning. So we have to treat them differently as to what we expect in these moves, right? We have to treat them differently. Look at this. It didn't quite make it. It actually didn't make it to this, but it didn't make it to the more important level, which is up here, the 15-minute. We're going to see it's continuing its uptrend. We're going to see, but what we don't want to see is this get broken. We definitely don't want to see this get broken. The hold levels of the move will protect that from being broken. Like this will protect it from being broken. This over time can't. Like if it just kind of goes like this and then it goes here, like obviously this can't protect the trend because your time has run out. It could protect the trend right now if it went straight down, or even if it went to this moment here, running the risk of losing the move, right? Data will show you what's happening, right? So like right now we are attempting to hold this, and hopefully this is going to keep cycling up here. Even right now, you'd have something very interior like this that will try to attempt to hit this again. But really, we need to create this origin level. Like we need to create an origin level here. We created a little tiny valley right here. It's not enough. It's not enough. It's just all rejection candles, right? You have to go after at a minimum this, which is actually also rejecting off of this. So we have no hourly candles. We have to go after that. Even I'd feel safe if it went here, then I would feel pretty confident. But okay, fine. This is a good start. This 15-minute level, because this actually this isn't a valley. It's just an inverse level, right? Like this is just, I believe it was just an inverse level off of right here or something, right? Like the 1 minute candles, I believe there's a little valley here. Yeah, it inversed off this little valley protecting the move, which it should. Like that's where I would have exited my trade too. It'd be crazy not to catch this level at 6:45 in the morning. By 7:30, you brew a cup of coffee and you just made 900%. Like I said, you'd be crazy not to. So it's not like this is showing you failure, but this is kind of just showing you like, yeah, okay, we got to get the hell out of this move. Brew a cup of coffee and you're up like 15 grand. It's like, oh, okay. So people are going to exit here, but that doesn't mean the move is broken. We have to see the other data points to see where this move is going to try to manifest and hold. We're not there yet. We haven't created an origin. We haven't created the data to communicate to us that we are trying to create an accumulation cycle. So interesting, because we kind of talk about accumulation cycles, some pretty basic FOT stuff, but now you're seeing how they get developed with data points and what it represents. And when you can start to make your own assessments and say, oh, this is breaking up, or oh, this is breaking down. Why is it moving up? Why is it moving down? Right? Because this was just nothing but a failed cycle in here. So we already broke this down and you can see the failed cycle. And now you're almost seeing the same thing get recreated again. So if we fail our cycle again, guess where we're going? It's not time to long yet, boys. Let's create an accumulation cycle and wait for the right trend break to get in. And then we can make tons of money because we're at a greedy level right now. So there's no rush. You can go and scalp all you want. You can, like I was scalping Link this morning and doing those things. And, you took a couple really nice trades on Link, and that's all fine and dandy. For now, like let's not be going too crazy, because what might look like the bottom is still not confirmed any kind of cycling or anything yet. What was 10% here is probably like 8% here, which is probably 6% here, because it's Pandora's boxing, right? So you're shortening that funnel, the entire time, and so now your tops and bottoms are, they might still be pretty good. They might be 4% or something, but given the size of this move, like here they're 4 or 5%. Back here was probably like 13 or something, 16, 17%. Jesus, this wasn't trend. When trend gets touched here, this was perfect entry at 9,200, or even looking locally. If we create these trends here, even like let's maybe not do it on a 3-minute candle. Let's do it on a different time frame. Even locally, like every single time this trend touched, it rejected. Trend is there to move you down. If you tried to buy every single trend break, you'd go broke, because 19 out of 20 trends are rejecting. Like here's the point of trend accumulation right here. Oops, let's move that candle properly here. Accumulation here, or you could even go right here. That's fine. It's just a little bit of a sharper trend. It's the same trend, but accumulation is going to give you a little bit more of a relevant break. Not important for today's lesson. You could have entered it here, that's where it gets created. So you don't worry about it here. But then there's 1, 2, 3, 4, 5, 6, 7. Tries to break still 8, 9, and then it goes over, and then it still fails. Trend is there to support the direction of the price. If you were to buy every single trend break, like this is how people trade, they try to buy trend breaks, you're going to go broke. Trends are there to make you fail moves. They are not there to try to break. People playing trend breaks are losing traders. They will lose money like constantly over time. Oh yeah, short trend. It's your best entry. Trend is always your best entry. Trend is like, oh yeah, man, best entry. Like, look, even here, trend that gets created, best entry. Hello, like this is a really good entry here. You see, trend is getting respected. It's not breaking. Hey, guess where we're going? We're going down. When we come up to this trend again, we're not going through it. I can promise you that. If you come to this trend, you better be watching it and being ready to click that short button because it's time to get some juice on this. Like it's going to reject. Trends reject. That's what they do over time. Like 19 out of 20 times, trend rejects. If you had a bot that was programmed to trade trends and all you ever did was tell it to trade $100 on the touch of every trend, it would have 19 out of 20 successful trades all day long, or 9 out of 10. You know what I mean? So like, oh yeah, man, trends are beautiful, beautiful, beautiful things.